Welcome to another episode of the Weekly Crypto Check-In, recorded on January the 29th, 2025. I'm your host, Robert Swarthout, and I'm joined by my co-host, Andres Sandate. How's it going, Andres?
Hey, good, Robert. Hope you're doing well. I'm looking outside, and I think today we're going to hit 65 plus degrees. So
Yeah.
I'm excited. Spring's around the corner.
All of a sudden, we went from really cold to warm and abnormally warm on top of it. So we were abnormally cold, now we're abnormally warm. And have a good maybe 10 days of this. It would be kind of nice.
And abnormally hot in the crypto space, in the sense of there's a lot of stuff going on.
There's stuff going on, and it's not our normal news, I guess,
No.
type of stuff. So it's a little bit of a different episode here. So this would be fun in some sense and sad in another. So anyways, we can get started here. So the first topic is Arizona became the first state to pass a bill out of committee so it can go up to vote for a Bitcoin reserve. I think there's 8 or 9 states that are headed in some form. They were not the first, so they're moving faster than other states. And, what I think will be interesting is all the states, all 8 or 9 of them, whatever they are, I believe are specifically only for Bitcoin. So they're Bitcoin reserves. We're going to talk a little bit later about the U.S. reserve could potentially be something more than Bitcoin, and there's some conversation around that. So different forms of these things are kind of potentially congealing a little bit, but we're at the beginning stages. Maybe this is the first inning of this of sorts.
Yeah, it does feel that way. Arizona is the I guess the first, and yeah, like you mentioned, I think there's going to be more of this. I'm always curious, like we've talked about on the show, what's going on kind of behind the scenes. Who's kind of advising the states in this regard, in terms of how the bills are drafted and how they're set up. But yeah, I mean, I think we always thought 25, when we got the election results, was going to be a year where you were going to start to see a lot more proposed regulation and a lot more maneuvering politically around this type of stuff. So here we go. It's beginning of probably what we'll see is a lot of this over the next several months.
Absolutely. We and I look forward to it. It'll be interesting to see if other states pick up the speed with this, or they wait to kind of, in some sense, defer to see what the Fed's going to do, or what the federal government's going to do. I don't know. It could shake out in different ways. So time will tell. Our second topic, I kind of just bring up because mixed in the shuffle of all the crypto news lately, is you have traditional finance, right? And they're always jockeying for their position. You see some of that happening with potentially like on the ETF front. There's a lot of ETF filings. We kind of talked about that last week, but the big banks. So recently on a Twitter space, Brad Garlinghouse, the CEO of Twitter, was saying how Ripple custody, which is they bought
CEO of Ripple, Brad Garlinghouse, CEO
of Ripple. Yes. Ripple last year bought Standard Custody, a crypto specific custody solution. And they said they signed HSBC last year. So there was a rumor that had happened, but nothing as direct as from the horse's mouth, literally here. And I kind of just bring it up to say is like, it's not just custody that's happening. We're obviously seeing, again, the ETFs happen and other, there's on-chain stuff that's happening with like bonds and stuff being tokenized on chain. But you definitely have, the banks wanting to have their piece and do what they can do. The crypto space is a little bit different, right? You can be a custody solution as well as basically a brokerage all in one, Coinbase, right? And I imagine over time that gets separated, but you have the bank specific institutional grade custody solutions making headway. So
yeah, I mean, it's another business opportunity now that there seems to be at least momentum around regulation. I don't think you and I are probably overly surprised that the bigger institutions, the banks leading the way, are going to seize on opportunities to generate fees, right? Custody is not free, so it's not it's not going to be this free complimentary service that they're offering to their high net worth clients. You got to believe there's going to be cross selling, and there's going to be all sorts of other stuff. I think it does bring up some interesting ideas that will get surfaced around how they're going to do KYC, and some of the stuff around these assets. And there's a long history of the private banks doing a lot of stuff offshore, Switzerland, the Caymans, Bahamas, etc., which somewhat dovetails with where we're seeing crypto at least has moved. But yeah, I think we're gonna start seeing a lot more of the services and ads and other things that populate in kind of mainstream financial press around these services, just like wealth management and other things.
Yeah, I probably agree with your statement that, so they can generate fees, so they're going to charge, clients to custody. A bit of a devil's advocate here is like, you don't get charged for custody, at least directly, as far as I'm aware of, like for your stocks and bonds. Like it's all kind of, I guess, baked in the price of sorts.
Right.
But crypto being a little bit different, there's no recourse if it gets moved to some other wallet. I think maybe kind of leads them to the ability, at least for the short term, to be able to charge for it.
Yeah, I mean, we talked about this last year when Schwab CEO came on. The new CEO at Schwab said personally something to the effect of, we just were late to crypto or didn't really embrace crypto. And I think that's changing. You think about the brokerage firms like Schwab and Fidelity, for example, and I know BNY Mellon was one of the big ones that got approval and approved custody last year. But if you just think about the independent RIA market, just the wealth channel, and the massive opportunity and the growth that Cerulli and other, folks that cover this space in this industry track, it's trillions and trillions of assets that are in motion and will be. And so you got to think that Schwab and Fidelity and these banks want to be able to offer custody as part of this, because again, more and more brokers, advisors are going to start to at least have a viewpoint on crypto, and they're going to want a custody solution with their custodian. So it's just, if you don't offer it, that starts to become a problem, right?
Yeah,
for their bigger clients, the RIA.
Yeah, and I guess the last thing I'll mention here is, we've talked about in the past, like, BNY is set up or setting itself up to do custody, which obviously is the biggest custodian, and they probably touch a lot of different advisors through that solution.
Yeah, and institutions, right, as well, right? Yeah. So if you're a giant pension fund or a big institutional foundation, insurance company account, like, you're going to want to know that those assets are in safekeeping, just like all the other assets from a record keeping and trust standpoint. So yeah, I think this is it's a headline that you could easily gloss over and not realize, but it's a big move and something that I think we have talked about, and more to come for sure around what the fees are, if they are, and how they dovetail with other services they're offering.
Absolutely. Our next topic is really the result of regulation. So crypto.com, one of those crypto exchanges you might be able to use, I guess, at a retail level, is delisting USDT, the stable coin, on 1/31. So basically 2 days from now. And I think this news broke like yesterday or Monday. So it wasn't like a huge heads up. I would imagine most of their trading was denominated into this dollars directly. So it wasn't a huge impact on them. But the MiCA regulations that came in Europe is what's driving this. You've seen exchanges already in Europe start to delist it, kind of ahead of the deadline, crypto.com being the most recent. And it's not just USDT that's getting delisted from crypto.com. They're also delisting the PayPal stablecoin, which I found interesting because that's run by Paxos, and Paxos is in the US. So I didn't dig into that immediately to understand why, but I'm not surprised that USDT is. Part of the MiCA is about what can actually back a stablecoin, and roughly 20% of the value that backs the USDT is not
MiCA approved.
MiCA approved, right? So it's Bitcoin, it's corporate treasuries, it's stuff that is not as pure as they would like. So
MiCA being the European framework around crypto and digital assets.
Yeah, for the EU.
Yeah, for the EU. So these countries' financial regulators and their infrastructure around regulation of financial markets got together over the last several years. They've hammered out these rules and this framework to say what is and what is not legit, approved.
Correct.
Yeah.
And and it's Europe's spin on financial regulations, right? I mean, it's always going to be a little bit different than the U.S., but admittedly, it's ahead of the U.S. right now because we don't have any. And for the most part, people don't complain about the MiCA. I think over time you'll see it kind of get massaged a little bit,
but as that relates to the U.S., what we could expect to see, hopefully in 25, I know you and I are optimistic, is as the regulators and folks on Capitol Hill start to work with this Digital Assets Council, et cetera, that we're going to talk about, you could start to see how that conversation could unfold. I mean, it did not happen quickly. MiCA being it wasn't like they got together and 6 weeks, 12 weeks later they had this framework. It took several years.
It's several years, and then once they, I guess, voted it in, I mean, I don't think it went into effect for 6 or 9 months after that, so it wasn't even an immediate thing then. So I would imagine what we see in the U.S., and we're going to kind of get to it a little bit at the bottom, our last bullet point, like we will get regulations. I would say there's probably a better than a 75% chance this year, at least baseline regulations. And we can kind of hopefully feel like we're on a good track at that point. But we'll get to that in a minute. So our next topic is kind of crazy. We've never talked about anything that, at least from a crypto perspective, that has dealt with personal harm. In this case, the Ledger co-founder. So Ledger is a device, looks like a USB stick.
Oh, wait, we skipped one. We got in-kind create redemption on BTC.
Yes, thank you. Sorry.
ETF. Sorry. You teased it out well, though.
Yes. So this is news that I think that everyone hoped would have been part of the initial launch of the Bitcoin ETF. So in-kind creation and redemption. That basically means that you don't have to use cash to get into them. If you have Bitcoin or you want Bitcoin out, you can get it. I think this is just this is the SEC waking up. We have a new SEC in place, effectively a new leadership, I should say. And while it's a smaller group of just 3 chairs at this point, 2 Republican, 1 Democrat, they've started changing things. We're going to get to it, the SOB 121 thing later, but it's not passed yet. So I know that the NASDAQ filed for the IBIT to create in kind. So.
The idea being, if I own,
it's close, is my guess. So
is the idea here, the takeaway, if I own and I have Bitcoin in a digital wallet, I could go to let's say BlackRock, or I could go to Bitwise, one of the issuers of one of these ETFs, and I could say, I want to give you my Bitcoin in exchange for ETFs in your ETF, or shares in your ETF.
Yeah. And that's not a taxable event, right? I mean, that's been the rub, right? So people that have Bitcoin that don't really want to have to custody anymore, and they want the ETF, they basically get a taxable event on the way in and on the way out.
On the way out, right? So this gives them an opportunity to get shares in an ETF, which is more tax efficient, and for some people they just want to have
custody. I mean,
they want to have that free custody. Yeah. They can contribute the Bitcoin in exchange, get shares in the ETF.
Yep. Okay. So, and it's I said Bitcoin ETFs here in the bullet point. I want to say that some of the Ethereum ones have also filed for that. Ethereum is such a small fish in the pond right now in the ETF world that it kind of probably flew underneath the radar, but I'm pretty sure I saw one headline about Ethereum there too. So,
okay, back to this, not to minimize it. This is the first headline that we have talked about a crime from the standpoint of like an assault or a kidnapping, a physical harm.
Yeah. So it's crazy story. So the Ledger, again, the device looks like a USB stick. It's kind of a hardware wallet is what it's referred to do self-custody of your own crypto. It's definitely the way, if you're an OG in crypto, you've probably touched a Ledger wallet at some point.
I have one. Yeah, I think you recommended I get one. So I have one, and I've got some crypto on it.
Yeah. It's, I think over time you're going to see less and less of these. They'll still exist, but I think it's the custody solutions will be good enough that people will trust them. And again, crypto comes from the libertarian mindset of if you don't control it yourself, you don't own it.
Right. Not your keys, not your crypto.
But there's risk. But so back to the bit of the bullet point story here is, so the co-founder and his wife were kidnapped. They were taken to separate locations, and the ransom was 100 Bitcoin. Well, when Bitcoin's $100,000, that's a chunk of change. And they are both now safe back home, safe with an asterisk, I suppose. And the headline was that his hand got mutilated. Mutilated, I guess, is up for definition, but he did lose a finger in this. I don't know which finger, and his French the Paris prosecutors were saying that everything is being investigated. Crazy story.
I was going to say this has the makings of at a minimum like a documentary type story, because this is a well-known crypto executive and his wife kidnapped with a ransom of Bitcoin, and now we have he comes back with a with a finger gone.
Yeah, I'm fairly certain that no ransom was paid. And they were somehow rescued by the police, or freed by the police. It's just a crazy story. Like, you used to hear like rumblings like years ago about like, oh, you can't talk about how much crypto you have, which generally I think is the right thing to do. You shouldn't be talking about it, especially online. But back in the day, it was like, don't even talk about having a ledger or like any hardware wallet, and just keep it quiet. People love to run their mouth, especially when they're making money, and it becomes dangerous. Obviously, he's a bit of a target running this kind of business. It's obvious that he's in crypto and all those things, but it's
we saw the really tragic attack and really assassination, I guess what you'd call it, of the United Healthcare CEO that happened in Manhattan. I mean, I think it raises the question around things like personal security and corporate security for these high profile executives and their families, given just the way in which everything is so much more public, right? All these individuals are out there, right? Living, operating, speaking, attending events out in major US cities. Man, that's scary. Well, absolutely. I'm glad that he and his wife are like you said, in asterisk safe. But tragic to hear.
Yeah, indeed. So next topic, we're going to jump back in the MicroStrategy train. I wouldn't say talk about him every episode lately, but it's been frequent.
Michael Saylor.
Michael Saylor, yes. And they're the tech company that has turned into, for all intents and purposes, a Bitcoin hedge fund. So I guess the speculation is they suddenly have a tax problem, and to the tune of like, they have $18 billion in unrealized gains. And they may be reaching out, at least this article I was reading, to the Trump administration to try to figure out how to get some help with the taxes, not necessarily to pay them, but to get tax regulations and guidance changed, because $18 billion is quite the tax bill, to be taxed on.
Am I seeing headlines or at least rumblings out there in social media that there's at least one of the Trump sons is floating the idea of eliminating capital gains on crypto?
I'm pretty sure it was Don Jr. saying that all U.S.-based crypto would be tax exempt.
I've read some analysis on that. We probably don't have time to go through, what I've seen, but would this type of situation be where,
well,
that type of rule would apply?
This whole like,
if it were to come to pass.
Yeah, that's a fair point. I think there's questions to be asked when it comes to, okay, if US-based cryptos don't have capital gains taxes on them, how do you define US-based? Okay, you start going down that rabbit hole. Well, Bitcoin is largely the most decentralized network, or we don't know who the creator is.
Right.
So, like, is it US-based? I mean, it's long assumed that at least the creator's name is maybe a Japanese type.
It's not on file in Connecticut like all the other, corporations, or Delaware. Sorry,
Delaware. Right.
Back to fourth grade geography. Yeah.
So there's certainly crypto token networks that have been started in the U.S. and it's very clear. It is not clear for Bitcoin. It is not the case for Ethereum. Not that we're talking about Ethereum here, but like it's just interesting to kind of see. It'll be interesting to see how this plays out. Because he's almost on a weekly basis selling stock, buying more, or selling bonds, some form of capital. And at the end of the day, like, not that $18 billion, so you tax it at whatever the corporate tax rate is on this kind of thing. I think it'll be interesting to watch play out, because I don't think he can move the market enough. But people are watching him as the guy that claims he's never going to sell some Bitcoin. Well, my guess is he just raises more debt and pays the tax. But you never know.
Yeah. Well, there's a lot of debt out there that is looking to be deployed. So, depending on what kind of LTV you can get on that crypto, there's probably a lender out there that will make a high interest loan. So, it's fascinating when you get into these, these perma bulls around Bitcoin, because we've talked about this when it applies to just individuals, right? If you have dedicated, let's say, a 1 or 2% allocation to Bitcoin, and you bought it at the beginning of last year, right, that might not be a 1 to 2% allocation when you look at your 1231 statement, given what happened with Bitcoin prices in 24. So the whole idea of rebalancing and having to sort of maintain a target allocation is a real issue. And unless you're MicroStrategy, then it's just more of a tax issue.
Correct. Yes. Yeah, it's the whole idea of rebalancing. I imagine there's many advisors that are like not certain on how they want to do it for crypto, because they don't want to be feeling like they're left out if it goes up hundreds of percent, but they also know that they need to do, in theory, what's right for the client.
That's right.
And their age, and there's all sorts of other variables.
A lot of things to think through, for sure.
Yep.
All right. Well, SAB 121 or SAB 121 rescinded by the SEC.
So we've talked about this back, I want to say it was October, November, where it made it through the House, it made it through the Senate, it went to Biden's desk, and he vetoed the bill that was going to repeal this.
Right.
So SAB is Staff Accounting Bulletin 121, basically said that banks, for all intents and purposes, couldn't custody crypto. They made it too expensive to. They could, but nobody was realistically going to do it. This happened on the 23rd. So this would have been, I believe, last Thursday. Yeah, last Thursday, the SEC came out with SAB 122 and basically said, okay, 121's gone. You can, banks can do it now. And all the silly rules are gone.
Right.
This was the beginning of the cleanup at the SEC for crypto. And either Thursday or Friday, which we'll get to here in a minute, Trump signed some executive orders around crypto. This, if this wasn't repealed, some of his stuff really couldn't have done much unless he was going to do an executive order, which I'm not sure if he could even do to get rid of SAB 121. So
now, not to go back and sort of revisit all the history under the Biden administration, but they were operating under what was commonly known as Operation Choke Point, right?
Was Choke Point 2.0, and that was more banking related.
But we saw some banks close down that were crypto banks, really. I mean, I call them that. They were largely set up to bank the crypto industry.
Correct. Yes.
And that all went away. And, that was in part of a broader narrative that you had talked to me about. I don't know if we did that on air or offline, but, there was all this stuff happening behind the scenes with ETFs coming, together behind the scenes, a lot of anticipation about were they going to get approved? Were they not? We saw, obviously, the failure of FTX. There was just a lot of stuff when you go back and look at crypto probably in 10 years and you put it all under kind of a zoom out sort of lens. It's going to say, well, that happened and then that happened and now this happened. This all makes sense.
Yeah. The Choke Point 2.0 stuff was largely just making it where crypto companies could get bank accounts. And there's now investigations happening, I believe, out of the Senate, if I'm not mistaken, basically trying to figure out who was responsible. Should they be held accountable? What does that look like? And it's certainly early days for that. But my guess is something at least newsworthy comes of that, whether there's actual, I don't know if jail time is the right thing, but if there's some kind of penalty, I would be surprised. But you never know.
Well, there's been a lot of stuff happening at the SEC, as we know. Gensler's last day was, a couple of weeks ago. We've got a nominee that's going to be going before, Congress at some point or committee to, give their background. We've got this Digital Asset Council that we're going to talk about. But also, did I see a headline, not to add one more bullet point, because I know we don't have all day, but did I see something about the website for the SEC no longer mentions the Ripple lawsuit?
Yeah, but the lawsuit's obviously still active. It moved from what would have been the active litigation list. Now they just don't keep in a list for stuff on appeal. So
it's not gone away. It's just
not gone away, but it definitely made the news cycle for a couple hours. Misunderstanding, really. And the last thing that we'll mention about Gensler here is he is headed back to MIT to, no joke, teach about crypto.
Oh, wow. Okay. Amazing.
So it'd
Well,
be interesting to see
is
if
this
it's
going to be a MOOC, or is this going to be like a closed door? You got to be enrolled at MIT? Because I'm sure
yeah,
if it was a MOOC, you would actually have tens of thousands of people that would sign up to hear his
yeah.
point of view, because he's going to be a little bit more unscripted.
Yeah, it'd be interesting if he goes back to his previous opinion the last time he taught about crypto there, or his the current party, I guess, party line that he carried for the last 4 years. It'll be fascinating to hear.
Hey, if it's like any other regulated industry in our country, I don't care if it's healthcare or
Yeah.
food, everything. It's a revolving door. So
Yep.
you have to put your time in on Capitol Hill and as a regulator to get a great job as an academic or in law to then get back into have a front row seat. It's just the way. Unfortunately, at least on the outside, that's how it seems like it works sometimes.
Yeah. Again, yeah. Unfortunately. So our next topic, so tokenization. Larry Fink was quoted as saying, "I want to see the SEC rapidly approve the tokenization of bonds and stocks." And I often joke, "What Larry wants, Larry gets."
I was going to say, you're just calling him Larry now.
Yeah, Uncle Larry. So my guess is sometime this year we get some sort of framework that talks about tokenizing bonds, which are already happening, but more specifically stocks. And then you get to the point where it's like, okay, why does the traditional markets have hours? Because all of a sudden you can trade these things 24/7, 365 if they're on a blockchain. And there's other stuff that needs to be figured out, like KYC. The question is, does that need to be reformed? I'm probably in the camp that says yes. But there's there's a myriad of things that could be looked at here. But I think that at a minimum, tokenization of them, maybe on a private blockchain to begin with, potentially moving to a public. I could see that transition. But yeah, he requested it, and I was like, okay, start the stopwatch because it's coming soon.
Well, here's what I challenge our listeners or offer an opportunity. If you're interested in the direction of financial markets, which now include digital assets, crypto, of course, in terms of a point of view, it's just one company's perspective. They're clearly biased. But if you're interested in just a overall perspective of where we could be going as a financial industry in terms of asset management, wealth management, financial products, technology, transparency and reporting, and how data plays a role in all of that, go and listen to the most recent earnings call, which was the 100th quarterly earnings call that Larry Fink has presided over, obviously, since he started the company.
Yeah.
So it's a little bit of an interesting sort of anniversary milestone. But to hear their team and him talk about where BlackRock is positioning the organization as a multi-trillion-dollar firm,
Right.
at this intersection of technology, data, and obviously providing services to consumers, institutions around risk and around investments and around crypto, to me is kind of must listen from the standpoint of, if you want to know kind of where, as they always said about Gretzky, I skate to where the puck is going.
Yeah.
It's just fascinating. And if you thought they were big today, and if you thought they were a powerful, influential organization, company in the financial markets today, I don't think people fully appreciate and grasp what they will be in 5 or 10 years, which is how long it could take for us to see tokenization of certain funds, certain stocks, certain private vehicles. But they are putting all of this together now, and they're talking about it on their earnings calls. When you really step back and sort of add up all the tech, all the things around data, all the things around what companies they're buying, etc., it just really does make sense. So
yeah, and what a difference a year makes, because I guess 13 months ago, they wouldn't talk about this at all.
They wouldn't talk about it on an earnings call for sure, but they were definitely doing work behind the scenes, as we know, and they're doing work 5 and 10 years out now. So something to pay attention to.
Yep, for sure. So our last topic is kind of a bundle of things. So Trump signed, obviously, a lot of executive orders, many of them not crypto related, last week, and admittedly continues to sign them. But specific to crypto, he signed an executive order that establishes a presidential working group on digital assets to strengthen leadership. That working group will be tasked with developing a federal regulatory framework. Yay, we need to see that. We need the crypto czar David Sachs will include the Treasury Secretary Bassett, who has been, I believe, approved.
Confirmed. Yeah. Yep.
And like it will not include the FDIC and a few others in that group, which I thought was interesting. They're kind of in the timeout corner after their Operation Choke Point 2.0.
Probably folks from the CFTC.
Yes, it will include them as well. So the executive order also basically prohibits any agency to set up a CBDC in the U.S., which, again, I'm not terribly surprised about at this point, because I think stable coins are going to be the retail version of that. And then there may end up being a stable coin of sorts that sits behind at a commercial level, but they're certainly not going to call it a CBDC. They revoked some of Biden's EOs around crypto, and also told the working group they wanted to do research on having a digital asset reserve, not, and I'm being very careful with my words here, not a Bitcoin reserve, which has always been the rumor. I think that we're about to enter a time where assets or digital assets that provide utility will start pricing themselves differently. I think the U.S. and Trump is or Trump's people have said maybe having one that is, well, tokens that are in the reserve that are U.S. based, U.S. created. So again, Ethereum wouldn't fall into that. Bitcoin probably just ends up in it because it's the biggest asset, not because it's U.S. based or U.S. created, at least that we know of. So I don't know. There was a lot there, but crypto was waiting for EOs from Trump and got them, but probably not all the meat that people thought would happen. I think some people thought that an EO was going to come through that actually said, "Oh, we have a Bitcoin reserve now, and we've already bought half of it," or something crazy, right? I mean, like the Bitcoin maximalists are awfully wound up these days. So
yeah. Well, my take on this is I read, and you may get this email daily, but I think it's an interesting read every day about digital assets and crypto from Byron Gilliam. And his take is we're at a very precarious, I don't know if that's the word he used, but we're at an important time in crypto, because you have, as he called it, you have a president in President Trump who is operating at an 11, right? When it comes to crypto, not a 10, like he's at an 11, as he said, which is interesting to hear that perspective. But we kind of heard that, and that was how he ran and has positioned himself. But you also now have this debate, I guess, maybe it's happening more in social media than it is out in more mainstream media around, what Trump and the media platform he's created, the meme coins he and Melania have created, what the Sons are talking about in terms of tax reform, and all the work that the industry has been doing, call it for now over a decade plus, around utility, institutional, enterprise, government, stable coins, like banking, and where those two intersect. That doesn't mean that we can't have meme coins, and doesn't mean we can't have DeFi and also have all this other stuff. But I thought that writer, that perspective was important, because I think when you're stepping back and trying to make sense of all of the things we're reading and seeing and hearing, it's like, where is this industry going? Is it going to go the route of I'm not saying they're the only voice in the room, but the BlackRocks of the world, where we're creating products and access for individual investors through ETFs to get into this industry more easily, and custody from Bank of America and Bank of New York Mellon? Or is it going to go more of the route of the innovator, creator, entrepreneur who wants to drop a meme coin, promote it, and see it pop in value? Like those, that doesn't mean they both can't exist, but they are trying to solve for different things.
Yeah, and all of those things that you just talked about there that are being created are around people speculating, right? Like it's just another asset. It's like betting on sports of sorts. To me, the fascinating part about crypto and where it kind of marries back in is like how these things are actually being used to solve problems.
Right.
And that's where the real value comes from, in my opinion. And everyone's, again, focuses on the shiny rocks right now. Those shiny rocks, I think, are going to become rather dull when utility kicks in. You can see what these assets can do. Admittedly, we're probably months and years away from that fully being realized, but it's it's just, I think people get distracted easily right now. It's like trying to understand why you got into crypto, and some people got in it because of NFTs, and then they are now in it because of meme coins. That's currently what is part of this hype cycle of sorts, is the meme coins for sure. So
yeah, but I guess it parallels with things like well, if you go all the way back to like the internet, right? Like when it was created initially, it was maybe this unique thing, and you could do social stuff with it. And now you look at like what you're able to do, and you see AI and what's going on there. I don't know if it's the same parallel or if it's a good analogy, but it's definitely something where, when we see governments and people and everyday stuff in your life is made easier because of the technology and crypto's role in it. That's what I think. What's the killer app, as they always say, right?
Absolutely. Well, we don't know the answer today, and hopefully find out soon, but we'll have to see. So
yeah.
So thanks for joining us on this episode of the Weekly Crypto Check-In. To stay updated on future episodes, you can find us any podcast player by searching Teton Crypto Capital or the Weekly Crypto Check-In. Take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.